If you haven't gotten yourself a high yield savings account yet, what are you doing? You're basically turning down free money in the form of higher interest that your money could be earning for you. Just to illustrate the difference between your big bank, which probably pays 0.01%, that's what Chase pays me. So 0.01% on $10,000, in 1 year you earn $1. Now, I use Wealthfront Cash. They pay 5%, and after a whole year, $10,000 earns $500, something actually pretty meaningful. Now, why do so many people not do this financial hack that is like the easiest thing to do? You just open up a bank account, transfer your money in there, boom, you're earning higher interest. I love psychology and I realized that it's all about trust. These big banks, they've had the benefit of being around for a long time and they have brand recognition. And they also have physical branches. And so these are really sticky, deep relationships, and it's scary to move your money somewhere else. Consider that your relationship to your primary bank does not need to be a monogamous one. If anything, you should be a little bit more promiscuous with your money. You should take your money where it treats you better. Using that concept, you don't need to transfer all your money wholesale to these new banks. You could try transferring a little bit at a time and get comfortable with it, and then you could transfer more money. Using the same example, you're only earning $1 with $10,000 because it's 0.01%. You could find the break-even point for the new bank. Let's say they pay 5%. You only need to transfer in 20 bucks to earn the same $1 because you're being paid 5% interest compared to the $10,000 sitting in your account that's only earning $1 after 1 year. So you could find the break-even point and use that as a motivating amount to try transferring to this new neobank. Some people think that the higher interest rates, it's too good to be true. I heard from some friends who are like, if they're paying that much interest, then where is their money being invested? Are they putting my money in some like weird offshore account, some sort of scam? It's not that, especially if it's a reputable high yield savings account, for which luckily there are many. The first thing to look for is a bank that is FDIC insured. That's Federal Deposit Insurance Company. They insure up to $250,000 per individual per account. Plenty of money that's covered. But the second thing is to understand the business model. Banks make their money from the difference between what the government will pay them, which is about 5%, and then they pay their customers 0.01% or 1%, whatever it is. So this is how banks are making money. Of course, banks also make money from making loans and other financial products, but for the sake of simplicity, that's the business model. So you might be wondering, how is it that these neobanks, these online banks, are offering such high interest rate close to what the Fed is giving? Well, think of it as acquisition cost. I actually worked on building an online savings account, and so I understand how the business works. It's a game of trying to get more of your dollars and be the primary bank over time. And so if they get you to trust their savings account, then over time, if they have checking features, hey, get a debit card, they actually make money off of every swipe. If interest rates go up and down, they always have the power to adjust that. But this is how online banks are able to offer higher interest. Also, being online, there's no physical branches to go to. So it does demand that you're tech literate to use these online banks and feel comfortable with that. But I think it's such a easy trade-off because these banks are safe, easy to use, and actually, let's get to that. How do you find a good online savings account? I use Wealthfront. In the past, I've used Marcus. I've also used like, CIT Bank, which is like a small bank, not to be confused with Citibank. At one time, I was using CIT Bank because they were paying a lot of interest. It was the highest at the time. And I actually hated their user experience. It was difficult logging in, and that says a lot for someone who's tech savvy. And also, there were things that made me feel like the account wasn't that secure because they would always like ask for these weird security codes, and then I would enter them and they wouldn't work. Anyway, a little bit of higher interest was not worth the poor user experience. That's why I like using Wealthfront Cash. I'm not sponsored by them. As someone who's worked in product and created designs for online banks, Wealthfront is simply killing it. Props to their design and engineering and product teams. They are at the bleeding edge of the online banking, and so they've introduced really cool features like real-time payments, meaning that they have really fast transfers and withdrawals, faster than other banks. They have $8 million in FDIC insurance. By the way, this is something to understand about neobanks, is that neobanks are usually tech companies. They themselves are not a bank, so they use a partner bank. Green Dot is a very common partner bank. Now, this is actually not a disadvantage. In a way, this could be an advantage. A neobank can have several partner banks, and they'll spread their funds throughout those banks in order to have more protection. That's why a lot of these neobanks are able to offer higher than $250,000 in FDIC insurance. Wealthfront is something ridiculous like $4 or $5 million, a ton of money. So if you have that much cash, be my friend and also check out Wealthfront. Wealthfront, they also have this feature that's missing from a lot of other online banks, and that is the ability to add a beneficiary. Basically, in the event of your death, whoever's listed as your beneficiary, they will get your money. And a lot of neobanks, even a lot of standard banks, they don't have this feature. And I think it's just such a critical, necessary feature in any financial product that you use. It has to account for what if you die suddenly? Where and who is the money going to go to? Very important. But how do you look for a good online bank? You could simply Google best high yield savings accounts. And if it's a reputable site like NerdWallet, probably fine. The one I use is Wealthfront. If you want, hit me up because they have this referral promotion where if you use my referral link, you get 0.5% added on top of the high interest they already pay. And this lasts for 3 months. So because I referred a couple of friends, I've had this access to a higher rate for a whole year. No, I think it's 6 months at most. Basically, I've been earning 5% plus 0.5% with this referral. So every time I refer you, you get 0.5% extra on top, and then I get 0.5% extra that I can earn on my savings. And 5.5% to earn on a savings account is historically very high. Now keep in mind, when interest rates do adjust down, all the banks will adjust down accordingly. But neobanks will still have a relatively higher rate. Let's say that interest rates go down and then it's more like 4%. Your big bank accounts, they're never really going to raise or lower. It's just like the same ridiculously low amount, like 0.01%. But these neobanks, they'll adjust up and down. That's the nature of savings accounts, is that the interest rate is not locked. If you want a locked interest rate, then you should look into CDs, certificates of deposits, or maybe even bonds, but that's for a different video. So I covered a lot just now, which is the business model of neobanks, how they make money. And so if you understand how they make money, you can trust them more. The tactic of transferring just a little bit of money to try out a new bank, you should be promiscuous with your bank. Using a high yield savings account, you can think of it as a form of investing. Now, it is not the same as investing in stocks, but what I mean by that is it's getting you to be rate conscious. It's getting you to pay attention to interest rates and how these small numbers can have such a big impact on your finances. So when you become more rate conscious, you'll be like, this bank is going to pay me 3%, that service is going to pay me 5%. I should be getting more from my money for free. If you're earning money on your money, that's a form of investing. I'm going to cover more investing videos, but this is the easiest way because you don't have to buy anything. You don't have to convert your money into stocks. You just transfer your dollars from one place to another and boom, you're earning more money on the interest they're paying you. So I'm a very happy customer of my online high yield savings accounts, and I want you to get that free money too. I'm Oz, and I help you mind your money.